Ladies and gentlemen, I ask your attention, please. The show starts in 3, 2, 1, go.
Assalamualaikum and good morning to our respected lecturer, Danial and everyone. Today, we will be presenting our group project for FAR570 Financial Accounting and Reporting Form. Our topic focus on FGV Holdings Berhad and Sime Darby Berhad, particularly in relation to interim financial reporting under MFRS 134 and segment reporting under MFRS 8. This presentation is prepared by our team members, ZAIM MUHAIMIN bin MUKHTAR, Danial bin Razi, and myself, ADILA binti MUHAIRI. We will be explaining the key financial reporting concepts and how they are applied in real companies. First, let's look at the background of both companies. FGV Holdings Berhad is one of the largest crude palm oil producers in the world. It was established in 2007 as part of FALDA to manage plantation and agribusiness operations. Its core segments include plantation, sugar, and logistics. FGV plays a major role in Malaysia's palm oil industry and is highly dependent on commodity price. On the other hand, Sime Darby Berhad is a well-established Malaysian multinational company founded in 1910. It has evolved from plantation-based activities into a diversified group, which is Sime Darby Plantation, Sime Darby Property, Sime Darby Berhad, and now focusing mainly on the motors and industrial equipment. It operates in more than 20 countries, showing strong global presence and diversification. MFRS 134 refers to the interim financial reporting, which governs financial reports prepared for periods shorter than a full financial year, such as quarterly reports. The main objective is to provide timely and relevant financial information to stakeholders like investors and creditors. This helps them to evaluate a company's performance, financial position, liquidity, and cash flows. Unlike full annual reports, interim reports are condensed, meaning they only focus on the significant updates. However, companies must still maintain their consistency by using the same accounting policies as in annual reports. Under MFRS 134, companies must disclose material events and transactions that affect their financial performance. For FGV, two major events were identified. First, increase in profit due to higher crude palm oil price. And second, delisting and corporate restructuring. These events significantly influence FGV's financial results and position during the interim period. During the interim period, FGV recorded a strong financial performance. Revenue increased to approximately 5.79 billion and profit before tax also rose significantly. This was mainly due to the higher crude palm oil price and improved production of fresh fruit bunch. The increase in CPO price was driven by a strong global demand and supply shortage, especially in major importing countries like India and China. As you can see, the impact on the financial performance, which is higher revenue and profitability, improved margins and stronger cash flow position. This shows that FGV's performance is highly sensitive to commodity price movements. When price rise, profitability improves, but if price fall, the company may face financial pressure. Now, let's take a move on the second event, which is delisting and corporate restructuring. Another key event is FGV's delisting. In May 2025, FALDA made a voluntary takeover offer to acquire all the remaining shares. As a result, FGV no longer meet Bursa Malaysia's public shareholdings requirement. This led to increased ownership concentration under FALDA and slightly decline in net asset per share from 1.67 to 1.65 ringgit Malaysian. Improvement in earnings per share. Although delisting reduced market liquidity and public disclosure, it allows FALDA to restructure the company more efficiently and focus on long-term strategies without market pressure. Next, current and comparative interim reporting. MFRS 134 requires companies to present current interim financial data, comparative figures from the previous year, and the latest annual financial position. FGV follows this by providing quarterly reports and year-to-date results. This helps users to identify trends over time, compare performance, and make better economic decisions. For example, investors can clearly see whether FGV's profitability is improving or declining compared to the previous year. Now, I will be presenting about interim reporting period for both the current and comparative interim financial statement. For the statement of financial position, the current interim period is 3 months, starting from 1st April 2025 until the 30th June 2025. The comparative end of the year is 12 months, which is from 1st January 2024 until the 30th December 2024. Now, let's move to the segment of profit or loss and comprehensive income. The current interim period is 3 months from 1st April 2025 until the 30th June 2025. The cumulative year-to-date is 6 months, which is from 1st January 2025 until the 30th June 2025. The comparative current interim period is 3 months, which is from 1st April 2024 until the 30th June 2024. And the comparative year-to-date is 6 months, which is from 1st January 2024 until the 30th June 2024. By presenting both comparative and current figure, FGV comply to the MFRS 134 paragraph 20, which require comparative information for the both interim period of the previous year. Now, let's take a look on the statement of changes in equity. The cumulative year-to-date is 6 months, starting from 1st January 2025 until the 30th June 2025. For the comparative year-to-date is also 6 months, which is from 1st January 2024 until the 30th June 2024. This shows how equity has changed over the 6-month period compared to the same period of the previous year. Last but not least, before I pass to the next presenter, let's take a look on the statement of cash flow. The cumulative year-to-date is 6 months, which is from 1st January 2025 until the 30th June 2025. The comparative year-to-date is also 6 months, which is from 1st January 2024 until the 30th June 2024. This provides users on information how cash was generated and used from first month of the year and how it compared with the same period last year.
We will present about MFRS 8 comparative statement. The core objective of this standard is transparency. It will require entity to disclose information that allow user of financial statement to evaluate the nature of business activity and the financial effect of the statement in which the entity operates. Defining operating segment. So what exactly constitutes of operating segment? According to the standard, it must meet 4 key criteria. First, it is a component of entity that engages in business activity. Second, it earns revenue and incur expenses. that its operating results are regularly reviewed by CODM, which is Chief Operating Decision Maker. Next is discrete financial information available. For the core principle, the guiding philosophy here is a management approach. This means we report segment information exactly how it is reviewed internally by management. If the boss use it to make decisions, the shareholder should see it too. How do we decide if a segment is reportable? Not every small department needs a full report. We use quantitative report to identify reportable segment. A segment is reportable if it meets any one of these 10% rules. First, its revenue is 10% or more of the total combined revenue. Next, its profit or loss is 10% or more of the greater of the combined report profit and combined report loss. Next, its asset 10% or more of the total asset of operating segment. The 75% revenue test, we must ensure that total internal revenue from our reportable segment account for at least 75% of the entity total revenue. If it done, we must identify additional segment until the threshold is met. Go to the next slide. What is the ODM? Defining the role, we have mentioned that the CODM or Chief Operating Decision Maker. It is important that to note the CODM is a function, not necessarily a specific job title. It can be one individual like a CEO or global such as POD. Responsibility of the CODM. The CODM have three primary responsibilities. Allocating resources to the various operating segments. Next, assessing the performance of the segment. Next, using internal financial report to make higher level strategy decision. We go to real world example, which is Darby and FGV. How to bring this to life? Let's look at two major Malaysian property, Darby Property Berhad and FGV Holding Berhad. Darby Property Berhad, in their quarterly report, they clearly identify their reportable segment: property development, investment, and asset management, and leisure. The management review the list performance on a regular basis to the current strategy. Holding identify its CODM as the group management committee. They break their operation down into specific divisions like plantation, sugar, and logistics. Notably, FGV specific that the GMC assesses performance based on profit before zakat and taxation, showing exactly how the management approach is applied in practice.
Thank you, Mama Daniel. Now, I will continue the presentation for types of segment reporting. There are two main types of segment reporting in the FGV company. It is operating segment and geographical segment. For FGV, this include in the operating segment, it is plantation, oil and fat, sugar, logistics, and the consumer product. This slide shows the financial statement of FGV. Each segment contribute differently to revenue and profit. Okay, now let's look deeper into the FGV operating segment. Okay, the first is the plantation division, which is the core business. It involves the cultivation, harvesting, processing of fresh fruit in the bunches into the fruit, palm oil, and the palm kernel. This segment is the main revenue contributor, but it's also highly exposed to the price fluctuation. Okay, the next is oil and fat division, which focus on the producing product like oleochemical and biodiesel. This segment adds value to raw material and help diversity income streams. Okay, other important segment include the sugar division, which handles sugar, refinement, and sale. This segment provides more stable income compared to the plantation because it is less volatile than commodity market. Okay, the next is the logistics and support division. This is support operation, transportation, IT service, infrastructure. Although it may not generate high profit directly, it improves the overall efficiency. Okay, the lastly is the consumer product division. Include the dairy, farming, and consumer goods. This reflects FGV effort to expand into the downstream and consumer market. Now, we move to the geographical segment reporting. FGV generates revenue not only in Malaysia but also internationally, like India, China, Pakistan, United States, New Zealand, and others. In this slideshow, the financial statement that FGV operates in the global market, and the performance is influenced by the international demand and trade condition. For example, any changes in the import policies or global demand can directly impact FGV revenue. Now, we move to the key benefit of segment reporting. One major benefit of segment reporting is that the enhanced understanding of company performance. Instead of looking at the total profit only, users can see how each segment contributes to revenue, profit, and asset. This helps investors and analysts to identify strong and weak segments, and also can evaluate management performance, and also can understand how the business operates. For example, if the plantation segment performs while the consumer segment decline, users can clearly see the difference. Another key benefit of segment reporting is enhanced risk assessment through the structural insight. This can help users to assess this risk by showing which asset and revenues are tied to specific industries. Investors also can decide if the company is diversified in name only or truly has multiple independent income streams. This also helps users to assess management risk. It tells them whether management is making smart capital allocation decision or if they are throwing good money after. And the conclusion for this presentation is MFRS 134 ensure the companies provide relevant and timely interim financial information, and for the MFRS 8 help user to understand business performance through the segment. For FGV and some Darby clearly demonstrate how the standard are applied in the real life. This disclosure help investor analysis and stakeholder make better financial decision. For our presentation, thank you for your attention.